Well, is Australia's property market in the middle of the largest bubble on record? Well, that's what one economist is claiming, warning prices will crash as a result. SBS Finance editor Ricardo Goncalves spoke with him. So, Ricardo, tell us, why does he think so?
Well, Janice, you've got to remember that a handful of experts have been calling or predicting a house price crash for more than 50 years. And guess what? It hasn't happened. Well, this time, Lindsay David, a former strategy consultant and macroeconomic researcher, warns the bubble is being fuelled by too much credit and will pop. Some have criticised his report as scaremongering. It may look picture perfect, but some say Australia's property market is sailing into uncharted territory.
When credit-fuelled housing bubbles burst, they are the economic equivalent of an atomic bomb.
Lindsay David says it's inevitable because we're being allowed to borrow too much money.
The amount of household debt this country has relative to the size of the economy continues to inflate to make us the largest, the most indebted nation of households in the world.
He's bearish on the Australian economy and says there's too many investors inflating prices with rents not keeping pace.
It doesn't matter how much you build, as long as there's this mass load of credit entering the marketplace to property investors, they're just going to keep on buying.
He warns banks will eventually stop lending to borrowers, like in the US and Ireland nearly a decade ago, bursting the bubble.
Across Australia, you could be looking at a fall of roughly 50%, and even more in some cases, possibly in Melbourne and in Perth.
The Housing Industry Association's Harley Dale says it's scaremongering.
There's certainly no indication out there that we've got some kind of impending crash coming upon us.
While he concedes more money is being lent, Australia's financial institutions are doing their checks and tests.
I think we need to have a little bit of trust and faith here in a very strong prudential system that we have here in Australia.
House price growth is moderating though. The Bureau of Statistics said today average capital city house prices grew by 1.6% in the March quarter. Darwin and Perth were the only capitals to record declines. Sydney continued to see the bulk of the gains.
I think it's appropriate that people are cognisant in Sydney that we're getting to a very mature stage of the property price cycle.
It comes as the New South Wales government delivered a record $2.1 billion budget surplus.
Stamp duty comprises about 10% of the government's revenue year on year.
A record $7.3 billion.
It's the most inefficient tax in the entire Australian economy.
The federal government's home ownership inquiry begins in Canberra on Friday.